Excellent. Well, I want to welcome everybody to today's session. We have Rachel Siegel with us here, and we will be talking all things accounting today with Rachel. I've been looking personally forward to doing a webinar on accounting-related topics. We came across Rachel's firm quite some time ago, actually, and we've had a little bit between her schedule and mine and a few other challenges to get together. But I'm excited that we're finally here and able to make today's session happen. So welcome, Rachel. Thanks very much for joining. Rachel is based in Winter Garden, Florida. And as I say, today's session is less about a specific topic than really just sort of talking through some questions on accounting principles and best practices and whatnot for MSPs. And so just before I turn it over to Rachel for a quick introduction on her side, just as a reminder for us, my name is Hartland Ross. I'm the president of eBridge and the MSP broker and the host broker. We specialize in working with MSPs and IT service firms on both organic growth and on mergers and acquisitions. We've been doing this now since 2001, and we publish a list every week of companies for sale, and it's free to subscribe. And if you're interested in having a conversation as a buyer or a seller, I'm happy, or my team is happy to have a call and go over your situation. So that's it from my side. Rachel, can I turn it over to you to do a quick intro on your side, your team?
Sure, absolutely. So I'm the owner of Go Figure Accounting. We're a full service accounting firm. We do bookkeeping, accounting, taxes. We do tax planning, strategic planning, advisory, all the good things. Hopefully we never have to do an audit with you, but we can do that if we need to. But what we really do well is big picture. And we are mastery certified in Profit First. 2024, we were the Profit First Firm of the Year. And I wrote the Profit First book for MSPs. And I do have the cybersecurity book also coming out shortly. We do this every day. And our goal is simply to help our clients succeed. And that's just one of the tools that we use to do it.
Excellent. Do you just as a side note, and maybe for the benefit of our listeners as well, do you do Q&A projects as well? Sometimes we get asked for the.
We have,
Yeah.
but I'm not certified in it. So what I do with my clients is I know enough to be dangerous is what I tell them. We'll
Okay.
do ours, and then when they get close to that actual sale, we want a certification on it. And if it comes back and it's too far off from mine, which doesn't happen very often, then I get on the meeting and I question why.
Right.
Because again, I know enough to be dangerous. I am a CPA, but I want them to actually have a certified before they go into that.
Okay. Interesting story. That's a side here because I've got some requests, active requests now. So excellent. Well, look, I appreciate that. I put together some questions, Rachel, for you today, really based on a lot of the conversations that we have with MSPs and providing answers to some of their questions, but also recognizing that on the one hand, there's always sort of professional advice as to what you should do, and then there's the real world as to really, does this make sense? And so I just was putting together a series of questions that pull all of this together, I guess. And one of the first ones, and you probably have these types of questions on a regular basis, but let's just talk about the books, right? Everybody says, well, you need to have clean books. And so my question to you is, like, first of all, what are clean books, right? Best practices, you should have clean books. Let's just talk a little bit about what that means.
So clean books can mean anything. To most accountants, that means you've got everything categorized and reconciled and updated, okay? But from our standpoint, that's not enough. And I'm just being honest. We want to make sure the setup is correct, because the proof is in the pudding. If your setup isn't maximizing what you want to do with your goals so that we can get that information out and make sure we're helping you hit your goals, It doesn't do you any good. And so we're looking at the setup first when we take over a client and talk to them about their goals. And then from there, we'll tweak the setup. And then we want to make sure everything is in and complete and reconciled. So when we're having more conversations about their business, we know the numbers are good. So we can help them and advise them on here are your options. And this is what you should do and why. Ultimately, it's their business. They can make all those decisions themselves ultimately, but we want them to understand each option they have because then they're really and truly in the loop and can make good decisions for their business.
Right. One of the things that we hear on a regular basis at the MSP owners' admission usually is that they are not financial. They're not a financial person. They don't have a financial background. They don't necessarily even have an interest in it so much. And so, as they say, this is at their own admission. And so, I think this session will hopefully provide a little bit of insight to those who might be certainly in those shoes. And, I think what Rachel's saying is that they're setting up your books so that they function as a method to capture your data and to produce taxes, but it could be potentially set up in a way that's not overly useful to extract management information out of. And so I think what you're saying, right, Rachel, is to be able to say, all right, well, how do we know where we're making the money, right? We know, there's the saying, I know I'm making money in this business, just look at the bottom line. Or the one that I like the best is I know I make business because, or I know I'm making profit rather because I can pay myself every year. And look, here's the whole history of how they pay themselves. I've caught them before where their balance sheet retained earnings is going down. But there's no profit, but they're pulling the accountant's magically paying them, but they're magically paying them out of money from years ago from retained earnings. So they don't necessarily understand how the books can be set up in a way to give valuable insight and be able to make business decisions.
Absolutely. And I wouldn't expect them to. I don't expect my doctor to be good at that either. So I go to somebody for my technology. I have an MSP. There's a reason. I don't understand a thing about how they're doing the nuances of that technology. I want them to be the experts there. I don't expect them to be the experts here. But when we have conversations, I want to talk to them about their business. So many times my MSPs come to me and they're amazing at what they're doing, but no one's ever talked to them about it as this is your business and let's talk about your goals and let's talk about get you to be profitable, not just paying yourself and stealing from yourself, robbing Peter to pay Paul. We want to actually help you grow and be successful and hit whatever goals those are that are within your world. And as you can tell, I don't talk a lot of accountant speak. I'm not talking about equity and liabilities. I'm talking about here's what you have on your books. Let's talk about your cash flow. Let's talk about what you want to be doing and how to get you there. So I've been a business owner. This isn't my first business. I grew up where my family had businesses. So I've seen the struggles and I've done all the little pieces. I didn't just go to accounting school and come out and it's going to spout jargon. They don't need that. They don't care about that. What they need is somebody to look at their books and explain it in a way they can understand so they can make decisions within their business to hit their goals.
And let's just to add the point that, and Rachel, feel free to disagree, but there's no reason why someone can't fix their books at some point. It's not like, hey, I set it up 10 years ago and well, unfortunately, that's just the way it's set up and I can't do anything about it.
Like you can always fix it.
Yeah.
You can always fix it and you can always move forward. And it doesn't always mean you have to go back 12 years and fix that.
Right.
You could start today and move forward and still be very impactful.
Right, exactly. I mean, you might have sort of a lack of insight and clarity on historical years, but hey, we can fix the best. The best time to do something was yesterday. The second best time is today, right, or something along those lines.
Absolutely, absolutely. And sometimes, like if they're using QuickBooks as the financial, we might be able to fix a lot of the prior years when we're fixing the settings, so it innately becomes more powerful, and you don't even know it.
Right, right. So let me switch gears here slightly, and this is the age-old question, okay? And I already, when I get this one, I love it because been doing this long enough that I can see what's coming. So there's this, hey, I'm in the conversation starts out as, hey, you don't live in New York or you don't live in California, but what you might not know about living in one of these two states, and it's not the only ones because there are people, we talk to groups from all over the place, but certainly when those two start, I know where they're going. And they're going to talk to me about how expensive it is to pay taxes. And so then they start going down the path of why they have run all these various expenses through their business to show that they don't make any money, so they don't have to pay taxes because hey, taxes are so high. And as I say, I particularly hear that when it starts off with I'm in California or in New York. But so my question to you is, how do you talk to a business owner who says, yeah, Rachel, that's great, but I don't want to pay more tax than I need to. So I need to or want to run these various expenses through the business, the personal expenses. And so I try to get it so that the business doesn't make any money. What are your thoughts around that?
So in my personal opinion, that's very foolish, just to be blunt. And that's kind of who I am. The good, the bad, and the ugly is always what you get. So there is a time and place to run certain expenses through the business. Your personal cell phone that you're using 24/7 for your business absolutely should be paid from the business.
Yeah.
But there's certain ones that should never be put through. But ultimately, we do tax planning. And what we're doing in our planning cycle is trying to get the win-win. That's ultimately the goal. We want you to save in taxes and build wealth at the same time. That's ultimately what we want. So we're coming up with those strategies that, yeah, you might save taxes in this, but it also at the same time can help you build wealth or build growth for your business or hit those goals. So if we can get the win-win, that's the best of both worlds. You can have it, you can build the wealth, and it's not draining the company at the same time.
So what's the downside to putting? I mean, from our side in M&A, it comes out because someone says, "Well, hey, that was such and such thing for my wife, or that was the home renovation that I did, or whatever." We've seen a lot. But how do you how do you justify not putting those things in and saying that they need to pay more tax? Like, what's the comment back?
So it's not necessarily about paying more taxes. It's about finding the win-win. There's a good way to do it. And for instance, there's a particular strategy I use with retirement plans that the owner can put a significant amount of money into the plan. It's completely legal. His employees will get some, but almost everybody that I have on these types of plans, they will get between 107 and 150% of the money every single year between the physical money and the tax savings.
I see.
So rather than just draining the account on personal expenses because they're doing things they shouldn't, this is a viable option that actually builds their wealth. And then when the plan runs its course, they can do a self-directed IRA, buy property with it, things like
Right.
that really builds up an asset, but still saves them on the taxes.
Got it. Okay, great. I will try to answer that when I get that question to groups and push them your way for the details.
Absolutely.
So another question that comes up, and I there's a few nuanced aspects about this, but you've got resources that are billable resources that are showing up under cost of goods sold, right? And with managed service providers, that's going to be your tech team, right? Your support team, and they're a billable resource in some way. It may be billed by hour. It may be billed that the person gets a certain number of hours as part of their plan. But in the end of the day, they are the product that's being sold, right? They're part of the service that's being sold. But we also have resources, of course, on the team that are in some cases overhead, admin, non-billable, and maybe also wear a hat where they're billable at times as well. And so my question to you is how does a business owner account, particularly going back to our question earlier about allocation of sort of setting up, I guess, of the P&L and being able to extract the information out of it to be able to make decisions. It's important to understand what our overhead is and so our variable and fixed costs. So how do we partition people who are wearing kind of multiple hats in a way? Is there a science to it, or is it a little bit more of an art?
Honestly, it's just the data. So they're paying them on payroll. So if we can get the payroll information split into the different departments, we can put the correct one under cost of goods sold and the other one into your admin. And it's as easy as that. And we do it every day of the week. So we would have coordinated with the payroll company, make sure they do it, make sure they understand whoever's doing the entry would do it. And then we map it from the payroll right into the QuickBooks so it goes in incorrectly. And then we have those allocations at the right percentages.
I see. Okay, that is simpler than I was expecting. So okay, that's good to know, because we sort of wrestle with that, particularly with the owners, right, where they might not necessarily be doing billable hours, but there's a component that they might play in monetization of the work that they do, and so it's hard to get the data out that we need when they don't have the information. Of course, we're looking back historically. So, okay, excellent. What are some of the most common issues that you see with MSPs? I mean, someone comes to you and they want your help. Maybe what they want help with is not what some of the suggestions that you make. You might find some additional things that you recommend that they change. But what are your kind of common issues, common challenges that you see that are being faced by MSPs?
So the smaller MSPs, it's always cash flow. They're struggling. They're
Right.
laying out money for equipment that they didn't have, and then maybe the receivable is a little slow, and they've got the next piece of equipment they need to buy. We use Profit First to solve that problem. The other thing is they need
Yeah.
to grow and they need to hire, but if they did that, it would affect cash flow. So again, we have a method within the Profit First system that we actually build that account up, just like we would build it up for their materials. So when they want to get there, it's not a problem anymore. It no longer affects cash flow while they're getting that employee up to speed so they can perform and be productive. The other thing I find a lot is they don't have good attorneys, just to be
Right.
blunt. They're very good at what they do, but their agreements aren't good. Their follow through isn't good. So connecting them with an attorney that actually understands is amazing. And it head and shoulders changes, especially for one that wants to grow and continue to grow. Having that valuable resource is just night and day.
Interesting. So I'm familiar with Profit First, but for those listening who aren't, could you just do a quick 30-second on that?
I'm not sure I've ever done it that quick, but I'll try.
1 minute.
So, Profit First is a cash flow management system for businesses. The original book was written by Mike Michalowicz. I've written the derivative for MSPs, and it's basically how to manage your company business-wise using multiple accounts and things like that, and setting things up proactively so you have healthy habits and it doesn't affect your cash flow. It also means you're always paying yourself, you're always going to have money for taxes and money for your goals and growth, depending on how you have it set up.
Right. So I think the way I've understood it in the past, and you can tell me if this is on the right track, but it is essentially you are not waiting till the end of the month to see what's left and then paying yourself if you can afford to. You are predetermining almost like a budget line item as to how much you're
Exactly.
to take, right? So
You're going to take certain allocations on a scheduled basis.
Yeah.
And the book, his original book says the 10th and 25th. That does not work in reality. Whatever your basis for payroll is. So if you're doing weekly payroll, you need to allocate weekly.
Right.
And what it does is you run your business on what's left over in your OPEX account, and you become really good at looking at that. So for the business owner doing it, if there's extra money in that account, you know you're doing okay. If you don't have enough money to pay that next bill, you know there's a problem. And it makes it that easy. Then we go in and solve those problems. One misconception is profit versus, how you do without. It's not about going without. It's not about doing the things for yourself that you want. It's about doing it in a healthy way where it doesn't affect your cash flow.
Right. Okay. Good. Good. No, that's a good point. And for those who want more information, I'm sure Rachel can help you, talk through a little bit more about what that looks like for your business. Another question that, and this is a really big one for us, is that we end up speaking with a lot of MSPs, and some of them are small operators. Others are, frankly, really at scale, and everybody in between. The buyers at the upper end of the sort of the spectrum that we end up having conversations with have expectations that are sometimes not realistic in terms of what their asks are of the smaller MSPs that they're looking to acquire. And particularly around getting data on their business. So they'll ask questions like, well, I'd like to get profitability by customer, by service revenue, right? This is the source of revenue. So I want to know how much money you are making off each customer by customer for hardware, for managed services, for project work, etc. And you can extract that even further into technicians and efficiencies and so forth. And of course, all of this is possible. It comes with a cost of time, a cost of setup, a cost of tools, etc. to measure that. My question to you is, how do you kind of make recommendations around, all right, you're at this level, let's just focus on this, right? And then, okay, now you've kind of graduated out of that, and we should start considering additional layers of visibility. How do you kind of have that conversation, and are there different categories or buckets, if you like, that you'd put an MSP into based on size, sophistication, and needs?
The answer is yes. But from what we do, we build that stuff in from the beginning. So you're asking for things that should already be built. And when you need them, they're just there and it's easy to access. And that's our goal. So when I say, we go in and we're looking at the setup, that's part of what we do. And because we do it so often, I throw things in there that they don't know why it's in there. They don't need to know. I know eventually they're going to need it. So when that question comes, I'm like, oh, we have that. Hold on, let me pull this for you. And that is why we do it that way. But the other side to that is I would never allow my clients to give that by customer, et cetera, because you're giving information that they don't need. Now, not to say they can't have it, but I would absolutely black out each and every customer, and it would be customer 1, 2, 3. And I want to make sure, especially for the little guys that are being bought, you don't want to hand them the keys to the kingdom at all, because you're hurting yourself. If, God forbid, that person isn't reputable, your clients probably are, but in case they're not using you, there may be somebody who's not quite reputable, and then they go after your clients. So you always want to rename them, don't give the actual details, but the information is correct. So that's sometimes things that we assist with when we're pulling those reports, and then we change them so that all the pertinent details are not in there, and then we'll send it.
Yeah, we actually, doesn't happen that often, but I would certainly, a number of times a year, we'll end up with a client giving us a report, and they send us their entire client, all the names, and we will do them that favor to so say, look, we're going to remove all of these. Either you have IDs for them, or we convert them into initials, or some other kind of anonymized way. But usually there's a client ID, and so we don't end up getting that. But that's a good point. So sharing client names, and frankly the same with employees as well, is
absolutely
the other side of it. But no, it's interesting that you would build it in from the beginning, and so are there tools that you don't have to go into necessarily all the tools, but like, are there tools that you're using? I mean, beyond just QuickBooks, because you need to push the data into QuickBooks or whatever accounting system they're using.
So we're using whatever tools they have. QuickBooks is one of them. The payroll system is the other. If they're on ConnectWise, we're using ConnectWise.
Right.
We're using the tools that they have. working on the mapping and getting that information into the best we can with what they have. I'm not a big believer in they should go spend money on more things. If they get to the point where we're concentrating on a sale, then okay, if I need to do this, I will. But we try to utilize what they already have in order to get that.
Right, right. Okay, good point. Well, I think I'm just going to reiterate what I said earlier, which is, best time to do this was a few years ago when you set your business up. But if not, like, there's no reason why you can't fix it now. So particularly if you're heading into a calendar year, and we're turning over into a new year here in a few months, and when that happens, you could start fresh, right? So I think worthwhile having a conversation on what's possible.
Absolutely. And in all honesty, if they're looking at doing that for first of the year, they want to look at it now, because what we can do is make changes now so they get comfortable with how to do those
Right.
things
Right.
before the first of the year.
Yeah, that's actually a really good point. It's a little bit of a practice rather than scrambling when the real data kind of is coming in. I mean, it's still real data, but it's you're practicing on the data that's coming in now, and also any kind of synchronization issues with tools and so forth as well, I can imagine.
Yeah, it takes time.
Yeah,
It does.
yeah. No, I appreciate that. And so how would you talk to an MSP about the points at which it might make sense for them to go from a contract bookkeeper to an in-house bookkeeper to having a controller to having a CFO? Like, what are there revenue sizes, or how do you sort of say when someone's ready to make the leap into the next stage?
So typically I talk to them about their business, what goes right as well as what goes wrong. So depending on who they are and what their goals are, that really depends on what they want. So we get the little guy who might have an in-house bookkeeper, but then she's not doing it right, and they end up having to redo all the books. At that point, there might be certain things she can do on the job, but maybe not the bookkeeping. So we try to repurpose her into something productive so that
Right.
she can still do the things maybe in their office that they're used to, but not the bookkeeping. So we can have better conversations about, here's your growth, let's get you on this, let's get you set up for that next employee, let's get you set up so you can go to those higher level clients. It's not really about revenue, it's about their goals and when they want to hit them. And then we make a plan of action. And every quarter we sit down and look at that plan, see where they're at, tweak it if necessary, and keep them moving on those goals.
Yeah, I just think, like, and I can appreciate that. I just think that trying to, I mean, a CFO is a hefty bill, and so that doesn't make, if you're doing $1 million, it doesn't make sense to have a CFO. So and probably doesn't even make sense to have a controller at that point. So I just, do you see any kind of time periods at which you would typically say it makes sense to have these different resources on the team?
Typically by the time they're at 750, they're doing the outsourced bookkeeping because they're ready for more conversations. Then by the time they reach 2 million a year, they really need at least a part-time CFO. And you can call it a controller, a CFO. Sometimes they're intermingled depending on what their needs are. They
Yeah.
need something. And I don't really see a need for them to get an in-house one until at least 4 to 5 million.
Okay.
Because typically, if they're managing the business and not working in it, managing it, they can actually get that far. And then by about 5 million, they need somebody inside the business
Right.
24/7 doing that.
Yeah. Okay. I think that's really good insight and information that would be helpful for planning purposes as well, for budgeting purposes. So.
Mhm.
Excellent. Well, look, Rachel, this has all been great. Just one last question for you is just, are there any additional any additional advice that you have for MSP owners that we haven't covered, that you think in your conversations that you share with your clients that would be helpful here for those listening to take with them?
My biggest piece of advice is you have to take that step back and decide instead of just, even if you're managing the day to day, you need to take the step back and look at it big picture and decide where you want to go with it, what you want to do with it. Because everything you want can be worked backwards into that. But if you don't take that time to step back, then you're just running by the seat of your pants. Even if you're just doing management and not actually the tech, you're still doing that same thing. You're trying to get more sales. You're doing that day to day. So big picture is super important. And as you want to build your own wealth and as you want to build your business or sell your business, if you don't take the step back, you might have a misstep. And once you decide that, going out to your preferred partners, your attorney, your accountant, your financial planner, getting them all to talk to each other to make
Yeah.
that happen better and faster is the biggest piece of advice I have.
Great. I don't want this to sound overly salesy because it's definitely not our style. But I do think that you're in the same business that we are in the sense that this is not cookie cutter, one size fits all. And having a conversation around somebody's unique situation makes sense. And presumably, if you're like us, we do those kinds of conversations and talk about what someone, they may be considering selling their business, but they don't really know what's the market like, what could I expect, what's the process. Maybe they're ready for it, maybe they're not. But that's fine. We're happy to have a conversation, and maybe we talk again in 2 years, when their circumstances have changed. But it sounds like having a conversation with you and as a business owner to understand what somebody's looking to accomplish and figure out where they are, where they want to go, and the kind of the gap there, and then figure out a bit of a roadmap. And I would assume that you do those kinds of conversations with people.
Absolutely. We do it every day. And somebody who wants to exit, we want to talk to them a minimum of 2 years prior to that exit
Right.
and have those conversations and possibly bring in people like you that says, okay, from our standpoint, we're looking at this, we're going to build these things up. If we do this, how sellable is it? Where do you think we're going to be? Because then we're doing it together. We're all helping and we can hit that goal together. But if they wait until the day they go, I'm done, sell this thing, they haven't done the work yet. And they may need to do things. So bringing you in earlier is always better.
Yeah. And just to wrap up on that point, we end up with having a lot of different conversations with groups in different circumstances, and some of them are in a position where time is not on their side for one reason or another, and unfortunately sometimes it's like health or personally related, and then other times it's their sort of their mental space, their burnout is set in, and they just don't have it in them to kind of continue. But on the other hand, we do have conversations with those, as I said, who are just kind of trying to plan ahead and trying to wrap their head around what's involved in this whole process. And I think those are the really good ones, because they are giving thought to timelines and expectations, and they know where the challenges are, and so we can talk through where we see the kind of the issues being, and to the extent that those can be solved, and sometimes they can, and sometimes they're frankly they're difficult to solve, but nonetheless, at least you're not going to be blindsided, and then I think working with Rachel, she can solve some of the issues. So some of them are operational, some of them are financial, but I think the point of having a conversation with a few different resources, including your CPA as well for tax planning purposes, are all having these resources in your corner are going to behoove you. So excellent, Rachel. Well, thank you so much for the time today. Really appreciate it. I think this has been really good. Hopefully it's valuable. If anybody has any questions, you can get in touch with Rachel, and we'll have a slide here with Rachel's contact information and of course ours. But Rachel, in the meantime, they can go to Go Figure Accounting, and your website is well, I'll let you fill that in if you like, and we can put that up.
Our website is gofigureaccounting.net, and you're welcome to go there. You can even schedule an appointment with me right online.
Excellent. Thanks so much. Really appreciate it, Rachel. Thanks for organizing, and Sherry's been silent here, but she's been helping to make today happen. So thanks to both of you. Really appreciate it. Have a great rest of your day.
You're very welcome. Have a good one.
Thanks.